Monday, the 27th. It's the start of the trading week, and we took this in the fast track bootcamp. If you guys don't know, at the moment, I'm doing a little private bootcamp for 10 people, getting them from where they're at currently to the funded stage. And it's currently like week 2.5. So it's been a pretty good bootcamp as of now. We took this trade today on the Monday live trading session, and it was a beautiful position. You can see the price played out within the span of literally 10 minutes. The actual position from the time that we entered to the time that we exited was actually a 5-minute trade, and I resulted in a 2.5% profit right here on my 200k ACG account. So it was a $5,000 position. So the title, or whatever I've decided to name this, is not clickbait. $5,000 in 5 minutes on a singular 200k account. Bear in mind, I did also take this trade on some other accounts. The Forex Funder, which got hard breach, which was super weird. That's a story for another time, and a separate TFT account. But that was just the main account, which is the 200k ACG. But I want to give you guys a trade breakdown, combining everything that we've learned over the course of the bootcamp to kind of explain why I took this position, why I saw what I saw, and I want to get into a little bit of depth today about discretionary versus mechanical trading and where the difference is between the two styles. Cool. Now, this is the position. Let's zoom out. Let's kind of reverse engineer this trade and dissect it and kind of go backwards and see what I saw at the start of the day. Cool. Now, as per usual, what do? We start off on the daily time frame, and we're doing two things. Hopefully, if you guys are watching up until this episode, or maybe if you're new around here, what are those two things? Go back and watch the previous 15 episodes of the bootcamp. But we're always looking at two major factors on a daily time frame. We're looking at market structure. We're looking at market sentiment. Market structure referring to the past 2 weeks of price action, what has happened. Or looking at the past 2 weeks, we've been incredibly bullish. US30 along with Nasdaq and GM30 have been incredibly bullish. We've been making higher highs and higher lows continuously, and price doesn't really show any like real sign of slowing down. So it's safe to say the market structure is very much bullish, and we've broken significant levels here to the left as well. Besides from that, current market sentiment and current market behavior is also bullish. Now, granted, the current candle we're printing is bearish, and that's because it's right now as the time of recording, which is like almost 6 p.m. However, at the time, the candle was more indecisive, it was more at the middle. And furthermore, when it comes to market sentiment, I would disregard the current candle you're printing and look at the previous 3 candles that have already closed, because the way that a candle looks when you look at it and the way the candle is going to shut at the end of the day are two separate things entirely. So basing your sentiment and your behavior based off of the current day's candle or today's candle is going to confuse you a lot of the time, because you might come across a chart like this where price is actively retracing, but according to the past 3 days of price action, it's been bullish sentiment. So you would still anticipate bullish sentiment and anticipate a bullish continuation instead of taking this day into account and thinking, we might be slowing down. Again, it depends on the context. Everything in trading is context, but given this current circumstance, we had bullish market structure, in my opinion, bullish market sentiment, even though we had a little bit of a low volume candle here on Thursday. And as we approached this region here to the left, I was kind of anticipating price to slow down. We had a still quite a strong bullish closure here on Friday, quite a strong sentiment closure to the upside. And to me, it just looked like price wanted to continue higher. So I was going to continue to trade the buys until proven otherwise, until price breaks significant structure to the downside and actually tells me, listen, bro, we're now accumulating or we're now in a downtrend. I'm going to continue to buy because the indices have just been carrying momentum, and the trend is your friend. And at the end of the day, the trend is your friend. Trade with momentum, all of that. Anyways, that's the daily time frame done. That's literally all we've done on a higher time frame. Structure, sentiment. We then zoomed into an hourly time frame and we looked for a point of interest. Bear in mind, all of this price action was not available at the time. I believe when we came onto the chart, it must have been around here. Cool. So this is the current price action that we saw on an hourly time frame. Now, typically speaking, in my opinion, this is pretty messy price action. It's pretty choppy. There's no super significant levels. There's no significant high or low. It's not like even a nice sort of ranging market. It's very choppy. It's very back and forth, and it looks a little bit weird. So generally speaking, I wouldn't be looking to trade this sort of price action. But given the behavior of the other two indices at the time of looking, so Nasdaq and GM30, they looked a lot cleaner on the hourly time frame, and their bullish market structure gave me a very strong indication that US30 was about to follow suit, and it was also about to have a move to the upside. It's just a behavioral thing. Generally speaking, when Nasdaq and GM30 are in the same direction and they're moving in unison, and US30 is not moving in unison, it's probably a little bit delayed and it's about to catch up. So that's kind of what I saw. Now, there's 2 places you can go ahead and draw your key level. You can either go ahead and draw it at the significant low, which would be the whole way down here, or you can draw it at the current level, current price action. Now, if you draw a level the whole way down here, your price is not going to get hit, your level is not going to get hit, you're not going to have a trade, because generally speaking, price is not going to give you a retracement that deep unless we're going in for a proper break of structure. Because in order for price to come the whole way down here and retest this significant zone, we'd have to break this structure, which is still a previous low, as well as this structure, which is also still a previous low. So we'd be breaking structure and having an intrinsic character to the downside in order to tap into our POI, and it just wouldn't make sense for this sort of position. So what I went ahead and done is I put in my key level right here at the little mini swing low. So this is still the lowest low that I can see based off of this movement, but it's not the absolute lowest low, because again, understanding US30, understanding the characteristics, we're not going to get a deep retracement like that. So I was using the lowest current low of the movement. That makes sense right here. So I went ahead and drew in that key level. Now, as you see, when I turn on my drawings, I have another little key level right here, another little zone. Why have I drawn that in? I'm going to explain that here in a minute. But for the time being, all we had was this little zone right here. Cool. I then zoomed in to a 15-minute time frame, and once again, we're looking at the behavior. We're looking at current price action. What is happening right now? I'm already anticipating a buy. I'm only looking for a buy. I'm only looking to take price higher. So in my mind already, I'm looking for price to come up here, and I'm looking to analyze and see what is the behavior telling me. Is it likely that we're going to come up here, or are we going to continue to accumulate? Are we going to retrace? Because it is Monday, and bear in mind, Monday's typical weekly characteristic is an accumulation day. It tends to kind of move sideways and move down. It's just not a great day in general. But certain circumstances, if you know about the 70-30 split, if you're in the mentorship, you know about that one, where 30% of the time price kind of just accumulates. 30% of the time price explodes in the same direction as Friday's candle. 70% of the time, or closer to 80, price kind of moves sideways and accumulates, and it's just dry price action. Today, I had a feeling based off of the NAS and German 30 and the dollar as well, that we were going to have a high volume Monday rather. I don't know why I said Friday. Disregard that. We'll leave that in there. Cool. So a 15-minute time frame. What is happening? What can we see? Well, looking here at the start of London session, price had a little attempted fake up to the upside. We tried to break structure here to the left, and we failed to break higher. We failed to close above this level, and we ended up rejecting and having a bearish move to the downside. The bearish move comes the whole way down. We tap back into this order block right here, and once again have another little mini impulsive to the upside. Now notice how even this little mini impulsive, we come to the exact same area that we previously rejected and previously failed to break above, and we kind of stall out here. Granted, this is a candle closure above and it is a body closure above, so technically we're breaking this structure and we're breaking this structure. But looking at overall behavior, notice how we break out and immediately break back in. So to me, this is still quite a significant zone, because we're meeting some level of resistance around here. Price action stalls, it's failing to break higher. We're getting weird reactions once we do break. To me, this is another significant level, and that's why I went ahead and drew a little mini zone. Further, I'm going to switch US30 just so I can illustrate this point to you guys a little bit clearer. For some reason, this US30 looks incredibly weird, so we're going to bring price back right here. Cool. So this is the little key zone that we went ahead and drew in. Granted, bear in mind this US30, the server provider we just switched to, has slightly different price action. The candles look slightly different closures, etc. It kind of varies, but it's the overall structure and behavior and sentiment that we're looking at right here, so just disregard it. But that's why I went ahead and drew this little miniature key level right here on a 15-minute. Now, what I was looking for was one or two things. So at this point, we have our significant low down here, and this is the low that we drew on an hourly time frame. And then we have a little mini 15-minute high, and this is just a point of interest or a key level that we're monitoring in terms of behavior, potentially looking to trade on the break above that or the trade higher. Cool. Then we zoom into a 5-minute. In the 5-minute time frame, we're doing two things. Number one, we're slightly refining this zone right here, just to bring it up to the 5-minute high, just so we can get a slightly more accurate level. Again, still paying attention here, but just slightly bring it up. And we're also really analyzing behavior. At this point, we're waiting for one of two things. We're either waiting for price to come and tap back into our key level, our major point of interest, and actually show us depletion and show us a change in behavior and show us that price is no longer looking to break to the downside. And then we can trade the sentiment shift back to the upside in the original direction and use this as like a little mini take profit. Because again, we're only really targeting a 1 to 2. We don't need too much. So that was one option. Or we were potentially looking for price to open up for New York session, break above this, and we could trade the potential retest on this end. So it was kind of one or two things. Now, again, you guys need to understand that at this point in the trading plan, at this point in the system, is very much discretionary trading. Now, what do I mean by discretionary trading? This is a concept I've been speaking about in the boot camp for the past couple of weeks now, and it's a super, super important concept. And that is mechanical versus discretionary trading. Mechanical trading is following a mechanical set of rules, following a yes or no. In order for you to take a trade, you must meet X, Y, and Z criteria. This must be present, this must be present. When this is this, you must do this. Like, it's a very straightforward, it's literally a checklist of yes and no sort of questions. And that means at no point in your mechanical trading strategy should you be confused. At no point in your mechanical trading strategy should it be like ambiguous, and should you have a level of confusion in terms of what am I now waiting for, or what is the next likely movement, or any of that. That is mechanical trading. Discretionary trading is having a set trading plan and having a set trading criteria, but ultimately you yourself as the trader are the trading plan and you are the system, and you're able to alter your plan slightly and fit it in based off your market experience and your knowledge on that system, and you can use your best judgment to act accordingly. So discretionary trading is much more ambiguous and it's much more loose, it's fluid, because there is only kind of a set criteria for you to follow, but at the same time you are the trading criteria and you are the trading plan and you can do whatever you want. Now that doesn't mean you can revenge trade and full margin and gamble and do some nonsense. That's not discretionary trading, that's just gambling, that's just you being bad. But discretionary trading is using your years of experience with a mechanical system and slightly making adjustments based off of your experience to just get better and have better results because you understand price action. I always recommend to all of my students, the people in the boot camp, to literally everyone, start off mechanical trading. Start off with a system that has a set criteria, yes or no. And it makes it very easy for you to follow and stay consistent with a strategy. And then you can focus your time, attention, energy on your mindset and making sure you don't mess up on that end. And once you have experience and once you've got a little bit of market knowledge, you can then start to trade a little bit more discretionary and start to adapt your plan and be more fluid and kind of take different opportunities based off of your knowledge that you gathered via the mechanical trading strategy. You see what I'm saying? But you can't just jump immediately to discretionary. That's just called not having a trading plan and just called being an idiot. So cool. At this point, I'm waiting for one or two things. And again, this is a discretionary trading model. I'm waiting for one or two things. Either price to come down, give me depletion and a sentiment shift, or price to break above and equally give me depletion and a sentiment shift. Now we sat here, we hopped on the live session and we waited for price action to kind of get moving. Now, again, we're sitting here, we're chopping it up on the bootcamp. I'm teaching, we're answering questions and stuff, standard bootcamp stuff we're teaching. Now, what I saw is that price began to stall out. We began to fail to break lower than this point. So we definitely have a key zone here. Price is accumulating. This right here is a little mini 5-minute depletion. And what I noticed is obviously we have this big bullish impulsive to the upside. And we have this little counter trend corrective that kind of comes back on itself. And this low obviously failed to break this previous structural low. So to me, it was clear that price was stalling out with failing to break lower. And to me, at this current point, it seemed very unlikely that we were going to have a much deeper retracement and come the whole way down here. So I was kind of anticipating that we're now potentially looking to break above and looking to just take that continuation higher. So at this point, I kind of deleted this little model down here and I was looking for the break higher. Now, if you know me, you know that my entry criteria, and again, it is fluid, it is discretionary, but the mechanical style of my entry criteria is waiting for depletion and then trading the accumulation break, or waiting for depletion and then trading the market structure shift or the strong sentiment candle that closes back in my direction. Technically speaking, at this current point in time, we've failed to break this previous structure. We've come back into the zone, we've had an accumulation, and now we're moving away. Dependent on how you view price action and dependent on what you consider to be market structure, this could technically be a valid entry because we're technically printing counter trend price action right here. And right here on this little initial bullish push, that would technically be a market structure shift. So this candle or this candle would technically be a valid entry if you're following the mechanical trading model. However, me being Daniel and having the system, like obviously I created this market system or my trading plan or whatever, to me this seemed a little bit too early and it seemed like a little bit too obvious to go ahead and take the initial buy because there was still a bunch of sell side liquidity below this low right here. And it just seemed like an early breakout. I thought, you know what, this is a fake out move. We want to sit here and wait. Now, again, this is a discretionary trading model because mechanically, if I was following the accumulation break and a sentiment shift, this would have been technically a valid entry. But just for me and experience I have in the market, I just know it's too early of an entry. We're going to take out sell side liquidity first. So we sat here and we continued to wait. And lo and behold, what did price do? Well, it came down and it ended up taking sell side liquidity, just like here. Cool. So at this point, we've come down we've taken sell side liquidity. I'm still looking at the same sort of formation. At this point, my brain starts to notice a very, very familiar trading pattern, and that is the dinosaur formation. I'm joking, relax. But a very similar trading pattern, and that is a 3-pin breakout. It's a setup I literally always talk about. If you guys know, then you know. If you don't, then you haven't been in any live trading sessions, and you should probably pattern up and hop in a live trading session. But I'm always talking about it. It's a very specific formation that happens all the time on US30. It's my highest probability trade setup, and it's essentially a bullish impulsive move to the upside, a little counter trend corrective. Typically, it's 3 lower highs that forms equal lows or forms liquidity in the formation of the lower highs. We come down and we come and retest a previous fair value gap. So you see right here, it's not super clear, but right here between this 5-minute wick and this 5-minute wick, we have a little fair value gap. We've got a little imbalance right here. You see that? Now price comes down and we tap into this fair value gap, tap into this little zone, and we begin to accumulate and kind of lose a little bit of momentum. We lose a little bit of that volume that got us here initially. At this point, we're sitting here, we're waiting. I still want to see the exact same entry model. I still want to see price show me depletion, which is giving me right here, and give me a market structure shift. So I want to see price break structure back in my direction. So at this point, we've traded back into the fair value gap. We've filled out approximately 50% or more because the price actually went further. And I can see that we're now having a shift in behavior. We're starting to slow down around this sort of region. At this point as well, NASDAQ has come into contact with its previous structural low, and it's also giving depletion. It's also slowing down. Same thing with US30. So all of this is happening in confluence with the other indices, which gives me a further bias that we're definitely going to be continuing long, and that behavior is currently shifting. Cool. So at this point, it's 220, 225. So we've got about 10 minutes, give or take, for stock exchange open. Now, I know that stock exchange is going to be an incredibly volatile move. It's going to be a very high volume candle. And I also know the characteristics of US30 because I've been trading it for years. And I know that given this sort of circumstance and given this formation, given the 3-pin breakout that we're forming, this was all kind of leading up and all anticipating the stock exchange move where we were going to have a breakup to the upside, in my opinion. Now, again, this is where it comes back to discretionary versus mechanical trading. Under the mechanical trading model, if we're waiting for an accumulation or depletion, in other words, and then waiting to see a market structure shift, there would not have been a valid entry. Because yes, this is depletion. And on the next candle, you can see price takes off. So let's just move it back. But yes, this is depletion. But there is no market structure shift. The previous market structure would actually be this candle right here, or this little zone that price is currently broken beneath. But I know that it's 5 minutes up until stock exchange, and typically speaking, price will start moving 5 minutes before stock exchange anyway. And I know that stock exchange likes to have a very big volatile candle, very high volume, like move generally speaking. So it was one or two things at this point, and this is exactly what I said in the live meeting. I might even play some footage right here if I can be bothered to go back and edit it. But everything's recorded on the live meeting. But I said it, I was like, listen, I know exactly what this movement is. I've traded US30 for so long. I know exactly what this type of behavior is. I see this all the time and time again. I know exactly what's going to happen. Granted, I don't actually know. Like, it's speculation at the end of the day. I'm not going to sit here and say 100% we were going to fly to the upside because we could have very easily dumped. But I was like, yo, this is very good in terms of behavior. The indices are in line. Everything's in confluence. This position looks really good. I am going to enter this trade in anticipation of the market structure shift because I understand that if price gives me a market structure shift, it's going to print a very big or high volume candle, and we're probably going to close the whole way up here, for example. And if we have that market structure shift too late throughout stock exchange, it's going to be an invalid entry or an invalid position for me to take, and I'm going to end up missing the move simply based off of waiting too long for price to give me a market structure shift. You see what I'm saying? Now, again, there's a very big distinction here that needs to be made. I did not take this trade out of FOMO. I did not take this trade because I didn't want to miss it. I did not take this trade because I knew that we were going to come up here and I just broke my trading plan because I didn't want to wait for confirmation. That's not the idea behind discretionary trading. But the idea is that I've adapted my system and adapted my plan and adapted my entry model based off of the behavior of stock exchange because I've traded this literally thousands of times and I've just seen this exact same formation. So I anticipated the movement. I was willing to put the risk on the table. I was willing to potentially get stopped out within 5 seconds. And it's exactly what I said on the meeting. So we went ahead and we found a position. I was like, cool. On the next candle, we're going to go ahead and enter a position. We put stop loss somewhere down here. By somewhere, I mean it was actually on a 15-minute time frame. Sorry, let me just set this this trade. Yeah, so we put take profit above here. The reason take profit is here is for two reasons. Number one, we have buy side liquidity just above this high, these equal highs right here. So that was the first little TP margin. Granted, I don't sit there and do TP1, TP2, TP3. At the bare minimum in my head, I'm going to come up and take out these highs. And the second take profit, or the actual take profit, the 1 to 2, which is my only TP, was above these highs. And this is just, once again, buy side liquidity. Equal highs, very, very easy region to target. Had it just beneath here at a little psychological level of 154.10 flat. So nothing major, but just a nice little flat number just above the structural high. And conveniently, it was perfectly my 1 to 2. Furthermore, it was actually 1 to 2.5 because I made an extra 0.5%. But I had two entries and one was slightly higher, one was slightly lower. So it was kind of the same difference. Furthermore, I'm going to flip back to my actual US30 and show you guys the actual position before I sit here and just show you an incorrect position. Cool. So I'm back on the actual US30 that I traded. So once again, at this point, prices come back. Furthermore, now that I'm saying this, and I'm saying this all in live time, but notice how this price action looks substantially different to the other US30. The other US30, again, same behavior, same formation, etc. But the way the price is printed right here and the candle closure and everything is slightly different on this chart. And it really does change the way that you view price action and your behavior and all of that. So I'd recommend make sure you're looking at the right US30. There is no correct US30, but it's the one that closely matches your server provider. So trade whatever your MetaTrader 5 looks like or MetaTrader 4 looks like. But cool. Anyways, price has now come down. We've taken out sell side liquidity. We've accumulated back around the fair value fill. We're now holding it. We've had a bullish candle back in my direction. And I know, we're about to break up. So right here at 220, we go ahead and execute the position. I know my entry is slightly higher, and that's because this candle started moving as I entered. But I'll go ahead and execute the trade. Now, again, discretionary trading model. This is the aggressive approach to this sort of position. Because if you're waiting to actually see a market structure shift, you would have had to have entered on this candle right here on candle closure. Because again, we never enter while the candle's moving. We always enter on candle closure. In order for you to get a market structure shift, you need a body closure above a previous body. So this is the previous structure. It's the last bullish candle. This is the next body that closed above here. So in order for you to wait for that market structure shift, you would have had to enter right here and the trade wouldn't have made sense. So that's why I went ahead and executed it early out of, again, my discretionary model, my experience in the market. I was happy to take the risk. I gave my stop loss a bit of breathing room, about 300 pips, give or take, and just down here at the order block. And the idea is that if price is going to come down, it's going to come down and melt and it's going to stop us out regardless. But I also didn't want to set it incredibly tight, like just beneath here, because I want to give price a little bit of breathing room to move throughout stock exchange. If it wants to come, take out sell side liquidity and have one of these, I didn't want to get stopped out and wicked out on a position. So I left it, gave it a little bit of breathing room, and we executed the trade. And then as you can see, we entered, and within literally 5 minutes of entering, if I switch to a 1 minute time frame, within 5 minutes of entering, you see right here, it's gonna put my mouse over it, but 1, 2, 3, 4, 5, or maybe 6, depending on if you want to cost half of this 1 minute candle. Let's say 5.5 minutes, it was at full take profit. Now, again, I may or may not show the live trading footage. Let me know as well in the comments if you want to see the live trading footage. If you want me to upload the full 2-hour live trading session from the bootcamp onto YouTube so you guys can see the thought process in real time and everything that went into it, let me know in the comments and I'll upload that. But as we were up within literally 5 minutes on my account, I was up about 5 grand. And I was literally saying that in the live session, like, listen, we could probably continue to hold this, and there's a decent chance, especially because it is stock exchange, there's a decent chance the price just continues to rip. This could have very easily been a 1 to 10, just because it's US30 and because it's stock exchange, it happens. But at this point, I had noticed that we'd taken out buy side liquidity. I was up 5 grand in about 5 minutes. It's Monday. I was like, you know what? I'm just not going to be greedy. I'm happy with that. That's a good gain. 5 grand in 5 minutes. We could definitely reverse from this point. So there's no point in me leaving risk on the table and leaving the markets to decide whether or not I'm going to get break even or make a profit. So I just went ahead and closed out the trade. And I made a decision in that moment that even if price continues and it turns out to be a 1 to 10 and I could have made 50 grand, I am happy on a Monday morning making 5 grand. And I shut the trade, and lo and behold, within the next 10 minutes, price ended up reversing and it never went back up into profit. So it was the perfect decision to make at that time. And again, it comes back to the discretionary trading model, and I just followed the 1 to 2 model. See what I'm saying? But that was a trade right there. Lovely little US30 long breakout. Hopefully you guys got a little bit of insights into my trading style right here and how I actually go about looking for a position. And once again, let me know if you want the live trading content. Again, something I really want to make clear here is discretionary and mechanical trading, two entirely different things. There is a discretionary model. The bootcamp has been about teaching you guys the discretionary trading system. However, there is mechanical trading system. So disregard that last sentence. But the bootcamp's been about teaching you the mechanical trading system and the methodology behind that. But my trading style, my win rate, and my profitability comes from my discretionary trading and my just market knowledge and experience. And again, the only way you guys are going to get to this point, the only way you guys are going to be able to trade the way that I trade and to kind of do this is by following a mechanical model for a set duration of time and gathering the data and having 10,000 plus trades with the same system, with the same model, with the same thought process, with the same everything. And through that process, you're going to adapt. Through that process, you're going to get better. Through that process, you're going to miss a bunch of trades furthermore. But it's those trades that you miss and those ones that you journal, that you catalog, that you backlog, that eventually end up refining your system and making you better as a trader. But that's it for the video. Hope you guys enjoyed. That's a lovely little bootcamp episode done. Break down all of that. Catch you in the next one too.